What if I told you that everything you've ever believed about retirement, saving for 4 decades, cashing out in your golden years, hoping not to outlive your money, is not only outdated but fundamentally flawed? What if I revealed a radically different path, one rooted in a revolutionary financial asset that could unlock tax-free retirement income in just 5 years or less? Yes, you heard that right. 5 years, not 40. Not by selling your house, sacrificing your lifestyle, or praying the markets don't crash the day you retire, but through a strategy the wealthy elite have been quietly using for generations, now made accessible by one of the most disruptive innovations in financial history: Bitcoin. Now, before you dismiss this as another crypto pitch, let's talk facts. The traditional retirement model was crafted in the 1930s, during the industrial age when the average life expectancy was 62. People were never supposed to live decades in retirement. That system is broken. We're now in the intelligence age, with lifespans stretching into the 80s, and the financial tools we've been taught to rely on are stuck in a bygone era. Enter Bitcoin, the first new financial asset class in over 500 years. It isn't just digital gold or a volatile currency. It's a foundational shift, unlocking entirely new wealth-building strategies. So, who am I? I'm Mark Moss, a tech-driven venture capital investor with multiple 8-figure exits in the Bitcoin space. I've mentored thousands on how to adopt wealth-building strategies once reserved for the 1%. Today, I'm giving you the complete blueprint to create tax-free retirement income using Bitcoin within 5 years, no matter your starting point. Let's rip off the Band-Aid. We have a retirement crisis. It's not a theory, it's a math problem. Nearly half of all baby boomers have zero retirement savings. Of the half who do, the average nest egg is around $200,000. That might sound decent, until you realize 4% withdrawal, the gold standard of traditional advice, gets you less than $800 a month. That's not retirement, it's survival, and even that assumes the markets cooperate. If you happen to retire during a downturn, good luck withdrawing anything safely, but it gets worse. Even when markets hit all-time highs, people don't feel wealthier. Why? Because asset values are tracking global liquidity. Your 401k might be worth more, but your dollar buys less. That's the illusion of wealth. What good is a bigger balance if your purchasing power is shrinking? The fatal flaw in traditional retirement is this: it assumes you'll sell your assets to fund your living expenses and pay taxes on that income, while your principal slowly bleeds out. You cross your fingers and hope you die before your money does. That's not a plan, that's a gamble. Meanwhile, the wealthiest people never sell. They borrow. They don't trade time for money. They acquire appreciating assets, use those as collateral, and generate tax-free cash flow by leveraging debt strategically. Robert Kiyosaki nailed it when he said the retirement system is designed to transfer wealth from the middle class to the financial industry and the government. The banks earn fees for 40 years. The IRS gets its cut on the back end, and you're left with crumbs. The wealthy, they play a different game entirely, and now, thanks to Bitcoin, so can you. Here's the game plan. First, understand the difference. In mindset, the middle class saves in tax-deferred accounts and hopes for 8% annual growth. The wealthy acquire appreciating assets, leverage them for cash flow, and structure their wealth to minimize or eliminate taxes entirely. They don't spend their principal, they pass it on. Now, traditionally, those strategies were only available to people who already had millions. But Bitcoin changes everything. Why? Because it's the first financial asset with built-in scarcity, absolute ownership, global liquidity, and verifiable digital trust. It's limited to 21 million units. The issuance rate is predetermined and declining, and unlike fiat currency, it cannot be inflated away by central banks. In a world drowning in debt and money printing, scarcity is king. The global store, of value market, where people park their wealth in real estate, equities, gold, collectibles, is projected to hit 1.6 quadrillion by 2030. Bitcoin, as a superior store of value, is on track to carve out a significant slice of that pie, potentially matching gold's $20 trillion valuation in the coming years. This presents a once-in-a-generation opportunity, and here's where the cheat code comes in. Instead of selling Bitcoin, you borrow against it. This creates a self-paying income stream. If your asset grows at 50% annually and your loan costs are 15%, you pocket the spread. And thanks to Bitcoin's digital nature, you can borrow any amount, small or large, instantly, globally, and around the clock. No closing costs, no bank holidays, no currency borders. Let's break it down with real numbers. Suppose you buy 1 Bitcoin today at $100,000. If historical growth rates hold, that Bitcoin could be worth over $850,000 in 5 years. You borrow 13%, around $111,000, and place $11,000 in an interest reserve account. That leaves you with $100,000 in tax-free income annually, forever. You're not selling the asset. It keeps appreciating. You're simply borrowing against it, like the wealthy do with real estate, equities, and trusts. Contrast that with traditional retirement, where $200,000 might get you $8,000 a year if you're lucky. Would you rather grind for 40 years for a meager payout, or compound smarter for 5 years and enjoy 6 figures in tax-free income indefinitely? Yes, there are risks. Bitcoin is volatile. That's why you borrow conservatively, 10% during dips, maybe 50% at peaks. That's why you secure your Bitcoin yourself, not on some shady exchange. That's why you use reputable collateralized lending platforms with proper insurance and security protocols. Risk management isn't optional. It's the difference between success and disaster. You may still ask, what if regulations change? Well, newsflash, the U.S. government is already buying Bitcoin. So is BlackRock. So is Trump. The floodgates are open. If the world's biggest institutions are loading up, maybe it's time to stop seeing this as risky and start seeing it as essential. Now, if you only have $1,000, start there. You don't need to be rich. You need to be intentional. Bitcoin is divisible down to 100 millionth of a coin. You can scale up. If you don't have money, earn more. But stop waiting for someone else's broken system to save you. This isn't about luck, it's about taking action. Download the calculator, grab the free book, map your numbers, run your own 5-year plan. And whatever you do, don't mess this up. You're at a crossroads. One path leads to 40 years of financial hamster wheeling. The other, to generational wealth in under a decade. To your success, onward, upward, and Bitcoin powered.